As we move into 2026, the investment landscape is undergoing significant transformation. Rapid advancements in technology, shifting global markets, and evolving economic policies are reshaping how investors approach their portfolios. Adapting strategies to these current trends is essential for navigating uncertainty and capturing new opportunities. By staying informed and flexible, investors can position themselves to benefit from emerging sectors and changing market dynamics. Understanding these shifts is the first step toward building a resilient and successful investment strategy for the future. Artificial intelligence is rapidly transforming the investment landscape, with significant capital flowing into AI-driven technologies and infrastructure. Industries ranging from healthcare to finance are leveraging AI to streamline operations, enhance decision-making, and unlock new efficiencies. The expansion of data centers and automation systems is fueling further growth, making AI a cornerstone of modern business strategies. As companies continue to prioritize AI integration, investors are finding new opportunities in sectors that embrace innovation and technological advancement. This shift is expected to drive substantial long-term value across global markets. Infrastructure and real asset investments are increasingly recognized for their stability and growth potential. Utilities, such as electric and water services, provide essential functions that tend to perform reliably even during economic fluctuations. Data centers, driven by the expanding demand for digital services and cloud computing, are experiencing robust growth. These sectors offer defensive characteristics, making them attractive options for investors seeking steady returns and long-term value. By focusing on infrastructure and real assets, investors can position their portfolios to benefit from both resilience and future expansion. Diversifying portfolios with international investments offers several key advantages, especially in today's interconnected global economy. By exploring markets in Asia and Europe, investors can access emerging opportunities that may not be available domestically. For example, infrastructure stimulus in Germany and corporate governance reforms in Japan are creating new avenues for growth. International diversification also helps mitigate risk by spreading exposure across different economic regions and sectors. This approach can enhance portfolio resilience and potentially improve long-term returns. Bond laddering is a strategic approach that involves purchasing bonds with staggered maturity dates. This method helps investors create a predictable stream of income, as bonds mature at regular intervals and can be reinvested or used as needed. By spreading out maturity dates, bond laddering also reduces exposure to interest rate fluctuations, offering a balanced way to manage risk. This strategy is particularly useful for those seeking stability and reliability in their investment portfolios. Overall, bond laddering provides both flexibility and security in navigating changing market conditions. Investing in real estate investment trusts, or REITs, offers several distinct advantages for investors seeking exposure to the property market without the complexities of direct ownership. REITs allow individuals to benefit from professionally managed real estate portfolios, often generating steady income through dividends. High-demand sectors such as industrial warehouses and medical facilities are particularly attractive as they continue to experience robust growth driven by evolving market needs. These sectors tend to provide greater stability and resilience, making them appealing options for those looking to diversify their investment strategies. By focusing on REITs in these areas, investors can tap into strong demand trends while maintaining liquidity and flexibility. The climate transition presents a range of compelling investment opportunities. Clean energy sectors, such as solar, wind, and battery storage, are experiencing significant growth as governments and corporations prioritize sustainability. Electrification initiatives, including the expansion of electric vehicle infrastructure and smart grids, are reshaping traditional energy landscapes. Additionally, climate-resilient infrastructure, like flood defenses and drought-resistant technologies, is gaining traction as communities adapt to changing environmental conditions. These areas offer investors the potential for both long-term returns and positive environmental impact. Technological advancements are reshaping the investment landscape, with quantum computing emerging as a powerful tool for portfolio optimization. By leveraging quantum algorithms, investors can analyze vast amounts of data more efficiently, leading to faster and more precise decision-making. Quantum annealing, in particular, enhances the speed and effectiveness of optimizing asset allocations, helping investors manage risk and maximize returns. As these technologies continue to evolve, they offer new opportunities for building smarter, more resilient investment strategies. Maximizing retirement contributions in 2026 is more important than ever, as increased account limits provide a valuable opportunity to grow your savings. By contributing the maximum allowed, investors can benefit from enhanced tax advantages and the power of compound growth over time. This strategy not only helps secure a more comfortable retirement, but also ensures that your investments have the best chance to accumulate and multiply. Taking full advantage of these higher limits can make a significant difference in long-term financial planning. Regular portfolio reviews and rebalancing are essential for maintaining alignment with your financial goals and risk tolerance. Over time, market fluctuations can cause asset allocations to drift, potentially exposing you to unintended risks or missed opportunities. By periodically assessing your portfolio, you can make informed adjustments that help preserve your desired balance between growth and stability. This proactive approach ensures that your investments continue to support your long-term objectives, even as market conditions evolve. Strategic sustainable investing is gaining momentum as investors seek to align their financial objectives with broader environmental and social responsibilities. This approach involves selecting companies that demonstrate a commitment to sustainability, ethical practices, and positive societal impact. By integrating these considerations into investment decisions, individuals can pursue competitive risk-adjusted returns while supporting long-term global well-being. As sustainability becomes increasingly central to corporate strategy, this investment style offers both financial potential and meaningful contributions to a better future. In summary, the top investment strategies for 2026 include embracing artificial intelligence, focusing on infrastructure and real assets, diversifying internationally, and implementing bond laddering for predictable income. Investing in REITs, capitalizing on the climate transition, leveraging technological advancements, and maximizing retirement contributions are also essential approaches. Regular portfolio rebalancing and strategic sustainable investing can help maintain alignment with your financial goals. Staying informed and proactive will be key to navigating the evolving financial landscape and making well-founded investment decisions. Thank you for joining us as we explored top strategies for building wealth in 2026. If you found these insights valuable, be sure to subscribe to stay updated with the latest investment trends. Your likes, comments, and shares help us reach more viewers and continue providing expert guidance. Stay tuned for more tips and strategies to help you achieve your financial goals.